Okay, so officially, everybody, you're welcome. So today we'll be talking about
Thank you.
how to calculate your pips, all right? Because it's very, very important because as a trader, you know that you're not joking in the markets. You're doing real business. You're transacting, you're buying, you're selling, and you're not just dealing with anyhow money. You're dealing with your hard-earned money. So it is always very, very important that as a trader, you know what you're risking, you know what you're targeting. Now, but it's not really easy knowing how much you're risking or how much you're targeting. Why? Because the market is being calculated in pips. All right. The market is being calculated in pips, and the market is being organized in lot sizes. So by the time you hear lot size and you hear pips, and you're not able to hear the amount of dollars you are risking or the amount of CDs or yen or ZAR or Naira that you're risking, it really doesn't make sense. Everybody wants to know how much I'm risking in this market. That is why it's very important to know how to calculate your pips and lot sizes so that when you want to take a trade, you should know the exact amount of lot size you should use depending on your account size. Okay, so by the time we finish our calculations tonight, you wouldn't need me to be the one to tell you, hey, use this lot size if you have this account size. You would know that within yourself. All right. So let us dive into the trade, into the charts where we begin our training officially. All right. Kindly use your chat box. Let me know if you can see my screen. If you can see my screen clearly, just use the chat box. Okay, good, good. Traders can see my screen. That's good. All right, guys. So here our topic says how to calculate your pips in Forex. How to calculate your pips in Forex. All right. So by the time we're done calculating pips tonight, if we have time, we'll dive into supply. We will dive into trading sessions. Tomorrow we'll start with supply and demand. I'm so sorry that I'm not following my syllabus accurately. I just have to do it the way I'm doing it because we need to move step by step. You can't just jump into supply and demand when you've not understood how to calculate what you're risking in the markets, okay? So after pips calculation, we're going to deal with trading sessions. Then tomorrow we deal with supply and demand, okay? So remind me what I said we're going to deal with after pips trading session, okay? In case if I forget. So how to calculate your pips in the Forex markets. First of all, before you be able to calculate your pips, you want to first of all ask yourself, what actually is lot size? Already, I told you guys the other day that pips is percentage in price and is the smallest digits that climbs up or down, right? It goes up or down in the market price. You see that around here, okay? Like here now, we can see, I think this session is not going. Is meant to be increasing or decreasing somewhere around here. That's where you'll be able to see your pips. Let me see which of the markets are running currently. Let me see if I can head to 1 minute time frame. I just want to show you what the pips is all about, okay? And it's something all of you should know already. I just don't know why it's not moving here. Anyway, the little digits you see going up or down around here is what we call the pip. Okay, so we're going to use the pip to calculate together with the lot size in order to know the amount we risk on each trade we trade. Okay, so let's just dive in straight to business. Now, how to calculate your pips. So what is actually lot size? Lot size, in my own simple definition, all right, is a unit of a currency used to calculate the value of pips and the conversion of money a trader is trading with. All right, is a unit of a currency, be it GBP, be it JPY, be it USD. All right, so lot size is the unit of the currency that you are using, all right, to trade against the markets, all right? And it is used to calculate the amount of pips and the conversion of the money that a trader is using to trade markets, all right? So we have 4 kinds of lot sizes. We have what? 4 types of lot sizes. Make sure you are jotting down, all right? And under the lot sizes, we have what we call the standard lot size. All right. We have the mini lot size. We have the micro lot size. And we have what we call the nano lot size. Now, out of all this lot size, the mostly used lot sizes are standard, mini, and micro, especially for currency pairs. All right, you can likely see nano in volatility index and all those ones. Okay, like VIX 75, you'll be able to see nano lot size in VIX 75. All right, but for our training, which is currency pair, we'll be dealing with just these 3 lot sizes. All right, so what is the standard lot size all about? The standard lot size is the highest lot size in the in the retail financial markets, not even retail, in the financial market. The standard lot size is the highest lot size, and its unit is calculated in 100,000. All right, 100,000 units. Volume is 1.00. All right, and its pips in dollar is $10. What does this mean? This simply means that one lot size, that's the volume, okay? We call it lot size, but the real name is volume. Like someone would tell you, hey, what lot size are you using? Or you're asking someone, what lot size should I use? The real name is actually volume. What volume should I use? Okay? What volume are you using to trade? Hey, use a little volume. All right, so the volume is what we always refer to as lot size, okay? Because that's the general name. So this is 1.00 lot size. That is to say, one lot size, one standard lot size. If you're taking a trade and you open one lot size while trading, it simply means that you are risking $10 per pip. It simply means that when price goes a pip in the market for you or against you, you are automatically risking $10 per pip. Okay, very soon we begin the real calculation and you'll be able to understand it better. Just take note of what I'm telling you. Standard lot size is 100,000 units, okay, per pip, and is worth 10,000 and is worth $10 per pip. For mini lot size is worth 10,000 units and is on a 0.1 lot size, and you are risking or you're making $1 per pip on a mini lot size. That is to say, if you open a trade and your lot size is on 0.1, each pip movement is costing you $1. So if price goes 1 pip in your favor, you make $1 because you're using a mini lot size. If price goes 1 pip 1 pip against you, you're losing $1 because you're using a mini lot size. If you use a micro lot size, which is equivalent to 1,000 units, okay, a mini lot size is 0.01, and that is 10 cents per pip. All right, 10 cents per pip, meaning if price goes for you or against you in 1 pip, you're risking 10 cents or you're making 10 cents. For nano is 100 units, 0.001, and you are risking 0.01 cents per pip. But like I told you earlier, nano is really not valuable in the currency pair markets. You hardly see brokers that will allow you trade with nano for currency pairs. Okay, so get nano off your mind. We'll be focusing on these 3. Let me give a summary and a recap. Standard lot size, each pip you're risking $10. Mini lot size, each pip you're risking $1. Micro lot size, each pip you're risking 10 cents. Okay, so as a trader, all right, let me ask one simple question, which I want everybody to use his or her chat box. As a trader, if I take a trade using 1 standard lot size, no, sorry, if I take a trade using 5 standard lot size and my stop loss is on 5 pips, how much would I make if it goes in my favor? Okay, my stop loss is 5 pips stop loss, word of stop loss. If price hits my stop loss, how much would I lose? The question again, if I take a trade with 5 standard lot size, okay, let me make it more simple. Let me make it simple right now. If I take a trade with just 1 standard lot size, and my stop loss is on 5 pips, how much am I losing? I took a trade with 1 standard lot size. My stop loss is 5 pips stop loss. How much am I losing? $50. Good. Very, very good. All right. So with you remembering what I told you, that each pip is equivalent to $10. So $10 times 5 pip gives you words $50. Good. So now for a mini lot size, if I take a trade using 4 mini lot size and my stop loss is on 5 pips, how much am I losing? I took a trade with 4 mini lot size and my stop loss is on 5 pips. How much am I losing? I took a trade with 4 mini lot size. Remember, 1 mini lot size is equivalent to $1. All right. I took a trade with 4 mini lot size and my stop loss is on 5 pips. How much am I risking? Somebody said $2. Somebody said $4. Somebody said $20. I'm actually risking $20. 4 mini lot size times 5 pips equal to what? $20. All right. So it's not $2. Okay. Now for micro, which is 10 cents. All right. I'll still give you guys your assignments. All right. Let us first of all make it much easier. Let me give you the simple formula to calculate your pips. All right, are you ready? Now, formula to calculate pip. Pip amount times lot size amount times value of lot size. Pip amount times lot size amount times value of lot size. That is the simple formula. Now, let's get to work. For instance here, let's say we have let's say I took a trade and I took a trade on a standard lot size. Okay, I took a trade on a standard lot size. So let's say I'm risking 5 pips on 2 standard lot size. All right. I took a trade on 2 standard lot size and I'm risking 5 pips. How do I know how much I am risking in dollars? The formula says pip amounts. So what I'm going to do first is I would bring out my calculator. Okay. I'll bring out my calculator and then pip amount. How many pips? 5 pips. 5 pips. All right. Times what? Lot size amount times 2 standard lot size. All right. Times the value of that standard lot size, which I showed you guys here. This is the value. All right. Where is my calculator? So 5 pips times 2 standard lot size times the value of the lot size, which is times 5 pips times 2 standard lot size times the value of a standard lot size, which is 100,000. I hope I got it. Five times 2 standard lot size times, okay, wait, sorry. Okay, that's it. 5 times 2 equals to 10. All right. The value of a standard lot size is $10 per pip. Okay, times $10. equals to 100. Okay, so the value of the pip, I think I'll have to do that again. 5 pips times 2 standard lot size times the value of a standard lot size, which is worth $10 per pip, times 10, which means I'm risking $100. All right. So the value of the pip means, it simply means how much dollar per that pip. That's the value of the pip. Okay. Another example, if I am copy, paste. If I am risking 10 pip on four mini lot size, how much am I risking on that trade? Using the same formula, the amount of pip, which is 10 pips, all right, times the amount of lot size, which is 4 mini lot size, times 4, times the value of a mini lot size, which is $1, times $1 equals to 40. So this simply means that I am risking $40 on this trade. Yeah, I'm risking $40 on this trade. Guys, just give me a second while you're still trying to learn it. Let me respond to a call. Okay, welcome guys back. All right, I'm back, and so 10 pips, 4 mini lot size, I'm risking $40. Let's do one more calculation for the micro lot size. For the micro lot size, let's say I'm risking 15 pips, or I'm risking 20 pips, and I'm using 5 micro lot size. If price goes and hits my stop loss of 20 pips in a micro lot size, how much would I lose? That's what we want to know, right? So let's make the calculation. Remembering the formula says pip amounts. So I'm risking 20 pips times how many lot size am I using? 5 micro lot size, micro. All right. 20 pips times 5 micro lot size times the value of a micro lot size is equivalent to 0.1. So that simply means I'm risking $10 on this trade. All right. So I'm risking $10 on this trade. So now you can see the clear difference between someone using a standard lot size, someone using a mini lot size, someone using a micro lot size. Guess what I would have done is let me make everything to be on the same number. Okay. So leave standard lot size like this. Let's work on mini. Let's say I'm risking the same 5 pips on a mini lot size and I'm using the same 2 position as the standard lot size user. Okay, how much am I risking? The formula again, 5 pips times 2 mini lot size times $1 per trade equals to $10. I'm risking $10 on this trade. For the micro, let's do the same thing. We're risking 5 pips also. We're risking, we're using 2 micro lots. And how much will I make or risk at the end of the day? The same formula, your pip amount, 5 pips times lot size amount, 2 times the value times 0.1 equals to $1. So I'm risking just $1 on this trade. So now you can see the clear difference between a standard lot size user, a mini lot size user, and a micro lot size user. So a standard lot size user is actually risking $100 because he's risking 5 pips. Okay, so by the time you know how to calculate this thing, you don't need to stress yourself thinking about how much am I actually risking. By the time you just tell somebody, hey, I took a trade with a 2 standard lot size and I'm risking 5 pips. Because I'm a fellow trader, I would understand what you mean by you're risking 5 pips on 2 standard lot size. It simply means you're risking $100 on that trade. Okay. And if you come to me and tell me, hey, I took a trade, I'm risking 5 pips on on 2 mini lot sizes, that simply means you're risking $10 on that trade. Okay. Same thing for a micro lot size user. So what's the difference between the 3 of them? You don't need somebody to tell you now the difference. The difference is the huge amount they are risking, or the huge amount they really are capable of risking, or the huge amount they have in their accounts. So one who is using a standard lot size per trade simply means he has a lot of money in his accounts that he's willing to risk $100 per trade. Okay, so that's where when we start our risk management, it's going to be very, very easier for you. All right, it's going to be much easier for you by the time we begin risk management class. So with this right now, you already understand the simple formula to calculate your PIP. Now, if you decide to go out there and start taking a trade, You don't need somebody to tell you how much you're risking on per lot size that you're using. Now, a question has arrived from a trader. He said, but sir, I am still yet to understand what a pip is. Some currency pairs has different grading for scales. So I do not really understand how pip is calculated. Pip is calculated the exact way I've told you right now, okay? If you're trying to merge it together with the volatility index and all those ones are calculated in points, but the point is still the same thing as pip. But there's a more different way of calculating for the volatility indexes, all right? But for your currency pair, which you're currently learning, this is the simplest way to calculate it and know how much you're risking per pip. What's the difference between pips and ticks? What's the difference between pips and ticks? The pip is the smallest digits that flows in the price, okay? That flows up or down in the price. The little digits. For instance, if you have 1 point, I just don't know why it wasn't loading as I wanted it to load. Now look at these numbers here. Okay, let me see if I can bring it out more. All right, I need to see which of them is moving. Okay, all right, now you can see here this amount is increasing and decreasing. All right, this is your pip. This is what we call the pip. The pip is increasing and is decreasing. This one, you can see it clearly, is increasing and decreasing. The tick is found inside the pip. All right, the tick ticks to a certain extent that makes the pip move to either increase or decrease. Just like we can say, okay, for instance, we can say 5 pips make $10. I'm just giving you a scenario. You can say 5 pips makes $10. Now you can say 10 ticks make a pip. All right, you can say 10 ticks make a pip, something like that. All right, so the tick is found inside the pip. So the tick would have to get to a certain amount of ticks to create a pip move. So for you to see these digits increasing and decreasing from a level to a certain level, okay, is because the ticks are working in between the pip. Okay. For instance, now let's say we're bringing our ruler, calculating our ruler from 0.2298 down to 0. Let me bring it out so we can see clearly here. Okay, calculating with your ruler from 0.2296 to 0.2206. How many pips did it give us here? 9 pip. All right. Now, if you're trying to take this back, let's say from, I just want to bring out a single pip. Okay. You can see what a single pip is. You see how tiny it is. The tick is in between the pip. The tick is what makes the pip come out as 1 pip or 2 pip or 3 pip. I hope you're understanding. I hope I'm communicating. We are doing our example with 5 pips. How do I see 5 pips on the charts? Okay, which is what I've just showed you right now with your ruler. Is easier for you. From here to here is 5 pip. You can see 5 pip from here to here. All right, from here to here makes 5 pips. So between this 5 pip, there are many ticks that created 1 pip, 2 pip, 3 pip, 4 pip down to 5 pip. So that's the difference between the ticks and the pip. Okay, use an example, a clear example of clock. The clock, the second, we have the hour hand, the minute hand, we have the second hand, right? So the second hand does the ticking. Am I right? It's ticking 1 second, 2 second, 3 second. And that second creates, how many seconds creates a minute? You have 60 seconds to create a minute. That's the way it works. It's now left to you to go and calculate how many ticks make a pip. I'm not interested in in those ticks, okay? I'm not interested in calculating that. I only know how to calculate my pip. And that's enough for me because with it, I know how much I'm risking. All right, so don't ask me how many ticks make a pip because I'll fight you. All right. So I believe you should understand what is the difference now between your tick and your pip. So now you should know that you shouldn't stress yourself thinking about ticks. You should only think about pips. If that was taken, please comment understood. So let's forge on. I believe the trading is sinking tonight. So now you know how to calculate your pips. You know how to calculate what you're risking in the markets. All right, good. So when you start trading, you don't need somebody to tell you where to set your stop loss. So using the short and long position tool that I gave you guys, we're going to use it to do a little work tonight. You ready? Okay. So let's say, for instance, we have support. I know I've not started teaching support and resistance, but I just want to show you something, okay? We have price rallying to the downside. Okay. And your plan was you want to take a buy position once price gets to this level. So therefore, you place a buy. I'm teaching you how to use your trading view, okay? Now you place a buy exactly at this zone. And you said to yourself, I want to risk just 10 pips. And this is you risking 10 pips. Okay, wait, I don't want to do it manually. Let me do it automatically, which is go to settings. What did I tell you guys how to set up your pips here? How many ticks? Okay, I think this is even gonna be better for you. All right, that's it. This is what we call the ticks, okay? Now, we want to risk 10 pips. What should I put in here to create 10 pips? Remind me, if you know you were in my class on the first day or the second day, I guess, how many digits should I put here right now for 10 pips? Talk to me, talk to me, talk to me. I want to hear you guys. I want to see it on the comment section. Let me know who was able to remember what I taught you guys. How many ticks should I put here to create 10 pips? Are you guys sleeping? Use your chat box. Come on. Traders are sleeping, I can see. All right, 100. I guess you guys forgot that. When we were doing 20 pips the other day, I put 200. Have we forgotten? So now with this, it's even easier. Now you can see that 100 ticks makes 10 pips. Now, if I click OK, you can see I'm risking 10 pips here. Oh, I love it. I love what we just saw right now, because the question now has been answered. Okay, so 100 ticks makes 10. Welcome back, traders. I don't know why I had that interruption. Okay. All right. I hope everybody can hear me clearly. I hope everybody can hear me clearly. All right. Use your chat box, please. I just want to be sure that you can hear me.
Yes, we can hear you.
Okay. So Now we can see clearly that 100 ticks is equivalent to 10 pips. So how many pips, how many ticks is going to give us how many ticks is going to give us 20 pips? If we are targeting 20 pips, how many ticks? Use your chat box. How many pips is going to give us 20? How many ticks is going to give us 20 pips? Good, 200. So now you understand the logic here, all right? It's better you now understand why I was putting 200 for 20 pips and 100 for 10 pips. It means ticks. Good. So you see here we have 20 pips. All right, back to business. So I decided that I want to take this trade on one standard lot size, or I want to take it on two standard lot size. If I take a trade on two standard lot size, tell me how much am I risking and how much am I targeting? My take profit is 20 pips. My stop loss is 10 pips. I'm using two standard lot size. Grab your calculators, guys, and tell me how much am I risking and how much am I targeting? Or if you're done with your calculation, turn on your mic and talk to me. Turn on your mic and come. Okay, said come again. I said, I'm using two standard lot size. I'm risking 10 pips and I'm targeting 20 pips. How much am I targeting and how much am I risking? Use your mic. If you've done your calculation, turn your mic on and talk to me. I want to hear from you.
That will be 60.
60 for what? Take profit or stop loss? 60 for take profit or stop loss?
60 for take profit.
TP $60. And what's your stop loss? Anybody who's done the calculation, you can turn your mic on.
You said two standard lot size, right?
Yeah, two standard lot size. What is my stop loss?
Okay. I think your stop loss should be 200. You're targeting 400 to get. You're targeting 400 and you're risking 200. I think 1-to-1 risk reward ratio. That should be it.
I'm targeting 400.
And risking $200.
And I'm risking $200. Does everybody agree with this before we begin calculation? Does everybody agree with this? Somebody said yes. Any other person agrees with it before we begin calculation? Okay, so let's calculate it and be sure. Remembering the formula, pip amount. Oh, I just canceled my calculator. All right, pip amount is what? Now we're calculating for stop loss first. Pip amount is 10 pips times the lot size amount, two standard lot size, times the value of a standard lot size, which is $10 equals to 200, correct? Correct, correct, correct. Okay, now for your take profits, we have what? Formula for calculating your pips. Pip amount, again, we were targeting 20 pips. times standard lot size 2 times the value, which is $10 per pip, equals to 400. Correct. So you can imagine, as a trader, you're just targeting only 40 pip. Sorry, you're targeting only 20 pip, and you're already making $400. What is the secret? The secret is your 2 standard lot size. As a trader, your stop loss of just 10 pip, and you lost your stop loss of just 10 pip, and you lost $200. What's the secret there? The secret is words, 2 standard lot size. All right. So now you guys already know how to calculate your pips. So if price then decided that it wants to go in your favor, maybe went playing around with your emotions and then started coming and hit this, you have won $400 because you used 2 standard lot size. But you must always understand that you should not risk more than what you can't afford to risk. So you should know how much you have in your accounts before you start risking such. But don't get it twisted. You're going to learn how to go for the MFF challenge so that you'll be able to have huge amount of fun to trade, so that you have better stop loss sizes. And come on, it's going to be very interesting when we get to that section. All right. So you shouldn't stress yourself at all thinking of, man, where do I get funds? That you have funds already waiting for you. All right, so guys, let me not just entice you so much. Now we have understood this, right? If you have any other question, make sure you're jotting it down for question section very soon. Now, the next thing we want to talk about is market section. All right, market session. Now, when we say market session, I hope you guys have downloaded the apps of the photo I sent you guys in the group chat, those apps, okay? All right. So when we talk about market session, what do I mean by market session? Market session simply means I would have loved to end this training now and start a fresh one. So it's going to be a fresh video for market session. Or whatever, let's just continue. Market session simply means the timing, okay, of the market, or the right time to enter a market and look for your entry setups or whatever, okay? Because these currencies we are trading, we know that these currencies belong to countries, and we know that worldwide all the countries are not all the countries don't see the sunshine at the same time. Neither do all the countries see the moonlight at the same time. Sometimes this country might be in day while the other country is in night. All right? If Nigeria is in night, America would be in morning. All right? London might likely be a bit the same with Nigeria in timing, but China might be at night. So because all these countries are not in morning at the same time or night at the same time, they all have their sessions of trading. Now, as a trader, you only want to trade when a session is on. You don't want to trade when a session is not on. You would, if you look at your chart, you will see the chart moving. It's normal. That was why earlier when I was looking for ticks, I couldn't see the pip ticks. Okay, that is because this is euro, right? Euro GBP, right? That's why we couldn't find the ticks I was looking for so much in it. Why? Because euro currently or GBP currently should be sleeping. All right, their session is over. A lot of people are sleeping, so there's no much activity in the markets. And as a trader, if you're trying to force yourself because you saw the market going little by little, you want to force yourself to trade, the spread is going to be so much. Remember what I taught you guys about spread, the difference between the bid and the ask. That's the difference in between. The spread is going to be very high, and the spread is taken by the broker. The brokers are the ones who actually take the spread. That's their little achievements. Okay, so if you trade when a session is not on, the spread will be very, very high because there's no much liquidity, and you don't want to fall prey to that. So you only want to trade when a session is on. So for Americans, their sessions, you should be able to know the timing for Americans. So for instance, we have the London session, we have the New York session, we have the Asian session. All right, we have a Sydney session and so many other sessions. Okay, so it's going to be an assignment for you to go and find other sessions. But for the London session, we have London session to be 7 a.m. to 5 p.m. They are trading sessions when they are active, when there's liquidity in the market, between 7 a.m. to 5 p.m. For the New York session, when you can trade the dollars, right? When you can trade the euros, is between 8 p.m. to 11 p.m. Now I'm doing this according to my local timing in Nigeria. So you know your own country and know how to set up your time accordingly. All right. So for those in Nigeria, the best time to trade the New York session is between 8 p.m. to 11 p.m. Those in Nigeria, the best time to trade their London sessions is between 7 a.m. to 5 p.m. All right. It also tallies a bit the same with Ghana. Okay. Ghana, almost the same time with London session. So why is it very important for you to trade according to sessions? I said earlier, you only want to trade due to liquidity, and liquidity can only be in the market when there are people awake and trading. Okay, so this is for you to know that there are times when, as a trader, you shouldn't stress yourself looking for setups in the markets. Just leave it and go and sleep, waiting for the real timing. Okay. Now, there's this saying that there's usually much liquidity in the market when the session is newly open, because this is when people are loading money currently. They are currently loading money into the Forex market. Because of that, there's a huge volume of volatility moving in the markets. So that's one of the best times to look for your setups and catch entries. All right. And then after that early morning session, then price will begin to go as usual, normal, until when the session ends. So I'm giving you tips on when you should wake up to look for entries. Okay. So that's that for market sessions and timing. So you have a little assignment to do. Go to Google and search, when is London session according to my timing or in your own country, so that you know when London session is on in Forex and when New York session is on in Forex according to your timing. You check out for Asian session. That's for the Japanese yen. Okay, when to trade Japanese yen, you check out for Asian section, their timing also according to your own clock, so that you know the time you should wake up, you know the time you should sleep, you know the time you should stay awake. All right, that's the essence of knowing market sessions. So you don't just wake up anytime and trade anything anytime, else you fall prey to huge spread. What happens in that huge spread is, once you open a trade, remember, if you've taken a trade before, you would always notice that the moment you place a trade, your entry would first of all be on a red loss before it begins going profits, right? So now, if you take a trade when a session is not on and the spread is high, if you place a trade, maybe you place a trade on 1 minute lot size, which is $1 per lot per pip, right? If you place a trade in a session that is not currently on, the spread will be so high such that you might likely be in straight $5 loss before it will start climbing up little by little, and it's not going to move quick because there's no liquidity, because that's not the session of the market. So it's going to continue to play with your emotions, and you don't want to fall prey to that, because it is worst when you try that in the night. You will end up not sleeping. you wouldn't even want to sleep because you want to make sure that this and let it just go a little blue. Let me just get out of it. So you don't want to fall prey to fake sections. Trade at the right session. So I hope this was taken, guys, and I hope you understood everything that was taught. If you have questions, please let me know. Turn on your mic and talk to me, guys.
So I have a question.
All right.
Yeah, my question is, if it comes to New York session, which pairs are you going to trade on?
Okay. Now for New York session, New York is the America, right? So since New York is America, you want to focus on trades that have USD or Euro. Okay, USD
Okay.
or Euro, which is dollar or Euro. Those are the those are the markets you want to look out for, or Canada, Canadian dollar, dollar. Okay. So
Okay.
for London session, you want to focus more on GBP.
GBP. Okay.
That's the Great Britain
All right.
pound, London. Okay. You want to either you look for GBP USD or Euro GBP, just any pair that has GBP. Like you see here.
Okay.
Yeah, like you see here, I was able to made a demarcation. If you want to do that on what I just did on your own trading view, once you highlight where you want to create a demarcation, you right click. If you right click, you're gonna see where it says add session. If you click on add session, session is gonna be added here. You double click on it and you can change the name. So I changed mine to London. Okay, and then I put the timing so that it's gonna be easy for me to see it anytime. Remember the timing. Okay, so you can say 7 a.m. to 5 p.m. You click enter and it's gonna be there. So you can actually drag it to anywhere you want to drag it. Maybe you want to put it here. Okay, so that's how you differentiate your London session, your Asian session, and put your currencies beneath any of those sessions where you want it to be. That's how you can just beautify your chart and make it easier for you to always look easily and understand easily. Was that taken?
Okay. Yeah, sure. Thank you.
Okay. Any other question, traders? Any other question? Concerning your PIP and calculation, I want to believe everybody understood how to calculate his or her PIP. So what you need to go and do now is to sit down and continue the calculation till you master it, and then you ask yourself, okay, so when I start trading, how much PIP am I willing to be risking? You think like a trader, all right? So by the time you ask yourself, how much PIP am I willing to be risking? How much PIP am I willing to be targeting for? Those things are important things you should start asking yourself and agreeing within yourself before the trading time starts. Okay. Any other question, guys? I believe everything has synced in tonight.
Hello, sir, Tim, please.
Yeah, I can hear you.
From the calculations on these are PIP and lot size and value. What about the volume? The volume, don't we need the volume in the calculation?
The volume is really not that important. Okay, the volume is really not volume. Sorry. I think you meant units, because
no, I didn't mean units.
The volume is the volume. The volume is what we call lot size. Like I told you guys earlier, the volume is what people we always call lot size. Yeah. So that's what you're using to do your calculation. So unless you meant unit, for units, it's really not relevant. Okay.
Okay. So what about like we see standard lot size, right? Now standard lot size, is it that anything above one, is known as standard lot size. Then mini lot size, anything below 1 is a mini lot size. Then the micro 0.01.
No, not anything above 1 is standard lot size. Anything above the points, the decimal you see here. If any number crosses the decimal and comes in front before the decimal, is a standard. So you can now begin to say 1 standard, 2 standard, 15 standard. While 0.1, anything after the decimal is mini. All right. Anything after the number that is after the decimal is micro. I hope you understand it better now. I hope you understand it better now, huh?
Yes, very clear.
All right. So don't make a mistake of placing trades on high standard lot size where you're not prepared for it. All right. So before you take trades, always make sure that you set up your lot sizes. Very, very important. Okay, guys. So I believe everything we understood everything that was taught tonight, and we're actually getting ready gradually. So tomorrow we'll be talking about support and resistance. Yesterday we dealt with candlestick patterns. Tomorrow we'll be dealing with support and resistance. If time permits, we might likely enter chart pattern. If not, chart pattern would be shifted to the next day after support and resistance. Okay, so the moment we get into support and resistance, we'll begin to see how the market plays around our supports and how it plays around our resistance. And we'll begin to also see how we can actually take advantage of the moves in the market to take trades. All right. So I hope you guys enjoyed the class.
Yes, sir.
Very well. Very well.
Yeah, sure, sir.
All right, guys. So for the meantime, stay safe. Do your calculation.
That means tomorrow we're not having a class, right? Tomorrow is Friday.
Tomorrow is Friday. Yeah, we ain't gonna have class tomorrow till Saturday.
So till Saturday. Okay.
All right. So guys, stay safe. Keep winning. Remain your one and only Forex coach, Team Legend.
Thank you, sir, and have a good night.
Good night, traders.